So this is another market outlook video where I'm going to show you the key levels to focus on and give you the trading bias for the week ahead. So today right now is the 25th of April and I'm showing you the charts on Sunday before the market is actually open. So we are going to be going through the various currency pairs to prepare you for the week of 26th April to the 30th of April. Now, as always, I'll be using the 3-day trading guide. Okay, I'll be using the MP trading strategy, which is taught in the 3-day trading guide. Okay, so it stands for market condition, price level, and entry. Again, if you have not gotten this 3-day trading guide, just head down to the description down below and click on the link. You'll come to this website. Just put your email in and I will send it to you. Okay, so if this is the first video that you're watching, right, you'll come from Telegram, right, please make sure to hit the subscribe button because we have many trading videos on YouTube. If you are a YouTube subscriber and you have not yet joined our Telegram channel, right, link is also in the description. Please join us because we have a lot of things going on in our Telegram channel. We send you signals, we send you, what to watch out for, right, we guide you, we show you the trades that we take. So definitely join us. So now I'm going to go ahead and look at the Forex Factory economic calendar and tell you what to expect for next week. Now this is the first thing that we always do. We always look at the Forex Factory economic calendar. So as you can see, next week we have the FOMC statement and FOMC press conference. Okay, so these are the kind of weeks that we hate trading because it's very difficult to trade and price is not likely to do much until after the conference. Okay, so next week just be very patient. Last week I think we sent many trades out. Okay, I can show it to you somewhere over here. Okay, last week we sent out many trades because the market was kind of good to trade. Okay, you can see that we sent out many trades, but for this week, okay, this week assuming that it's 26th of April because we are preparing for next week. For this new week, it's going to be harder to trade because of press conference, and press conference is where price doesn't make a committed movement until after the conference, right? Because big institutional players do not want to go in big before an important news event like the FOMC press conference. Okay, so hopefully that is clear. So let's go into the charts. Okay, as always, I'll be using the MP trading strategy to guide you through. So the first thing that we always do when we look at the chart is to ask ourselves, what is the market condition? So right here, this is DXY. DXY stands for dollar index. Okay, it shows you the dollar. Of course, if this is bearish, then that means that USD is bearish and we should look for Euro dollar long, Pound dollar long, Aussie dollar long, Kiwi dollar long. That's how we use it, okay? Personally, I do not trade directly into DXY, okay? But you can if you want to. So right here, we can see that previously DXY was in an uptrend. Okay, the market condition was bullish previously. You have a high here, you have a low, you have a higher high, higher low, higher high. Okay, but recently what happened was that price broke this higher low right here and made a lower low. Okay, so in that case, the trend is no longer bullish. Okay, in fact, if you were to look at this price movement here, there's actually a series of lower lows and lower highs. Okay, it's a bit difficult to see. So what I'll do is I'll switch to the line chart for you and you can see that this is a low, this is a high, this is a lower low, lower high, so on and so forth. Okay, so right now we're in a bearish trend. Okay, but price was resisted here. This is actually given by this swing low level, resisted, and right now it's right smack on support. Okay, so what we expect is that next week price might just do a slow retracement up, just very slow retracement, okay, during FOMC. Hopefully gives us a nice candlestick pattern here and then it starts falling down. Okay, so please do not chase the market because right now there is not much space left. Okay, if you short right here, you are shorting straight into support. Okay, so this is why it's very important for you to watch these kind of videos that we upload because it shows you what we are looking at and it is based on our own experience. This is not something that you can get from our day trading guide. Okay, our day trading guide is good. We show you the steps, we give you case studies, we tell you how to read candlestick patterns. But this is where you actually see how we do it, and this is where our real experience is being translated to you. Okay, so please make sure you watch all our market outlook videos moving forward. So this is what we are looking for DXY. Now let's move into euro dollar. Okay, euro dollar, I only have two key levels because it's quite clear. Right here you can see that price previously was making a low here, a high here, and of course a lower low first, then lower high, so on and so forth. Okay, but just like the DXY, because DXY and euro dollar is kind of like inversely related, so it looks the same, it's just the opposite. Now, price actually broke above this. So this level, this swing high is broken. So right now we are more of a bullish trend. We are more of in a bullish trend right now. Okay, so that's part of the M in the MP trading strategy. The next thing that we need to look for is price level, okay? Because after we know the market condition, which is bullish, means we want to buy, we need to look at where we should be buying. So in this case, this is the level because this is a swing high. And if you can see on Friday, this is a very nice bullish engulfing pattern. Now, the problem is that price is in the middle of nowhere right now. It's here. This is your resistance. This is your support. If you were to buy at where price is right now and do your stop loss, something like this, and you'll take profit somewhere like this, your risk to reward is not going to make sense. So for this reason, you have to be patient. Just be patient. Wait for price to come back down. Okay, it may not happen. It might just also go straight. Okay, we do not know. But nonetheless, it's not wise for you to chase the market. Okay, just be very patient. Wait for price to retrace to somewhere here. Look for a candlestick pattern as part of the E in this part, entry. Okay, entry trigger. We need a bullish candlestick pattern. So in this case, just wait for a bullish candlestick pattern right here, and then you take the long up, and that will make more sense because you might get in an entry, something like this. Okay, maybe just something like that, and you know your risk to reward will still make sense. So this is how you should trade this pair. Okay, you shouldn't be chasing the market. Now let's move on to pound dollar. Pound dollar is a trade that I personally do not recommend that you trade because it's quite messy and the levels are quite close to each other. So let me just run you through the levels. So we have this level right here, which is quite obvious. This is the swing low. Okay, this is a swing high. It's very easy to see these two levels. But let me show you why this is a level as well. So if you can see, this is actually a left shoulder, and this looks like the head, and this is a potential right shoulder. So it's like an inverted head and shoulder. So for this reason, we're going to put a key level right here. Okay, this is a level that you want to watch out for. Price hasn't hit it, but even if price hits this, we don't recommend buying it because it's quite close to the resistance, unless you can get in with a very nice stop loss, maybe a very small candlestick pattern that gives you entry, and then you know you can get a decent risk to reward, then you take the trade. But other than that, I don't recommend taking this trade because as you can see from this, the risk to reward is probably going to be quite bad if you do not get in with a tight stop loss. Okay, it's probably going to be less than 1:1. Okay, so less than 1:1.5 is a bad risk to reward ratio, and that's not something that I recommend that you trade. But nonetheless, this level is important, and this level as well is important. This is more of an intermediate level, which is given by this swing high here. This level is also important because it might look something like a head and shoulder. So this is a left shoulder. Okay, let me draw it out for you. This is the right shoulder, and this is the potential right shoulder. So as you can see, this chart is very messy. It's not easy to trade, and it's not something that I recommend. Okay, this is mixed. It could be bullish, it could be bearish because it's more of a range bound. So please keep this if it's possible. Now moving to dollar franc. Dollar franc is a clearer example. This is the kind of trade that I recommend. So last week in the previous market outlook, I recommended to go short somewhere here. Okay, if you had taken a short right here and you know did something like this, then right now you would be up about 1:1.45. Depending on whether you took the trade here or you managed to get a retracement higher. But right now it's still bearish. Okay, the reason why this is still bearish is because this was the high, the low, higher high, but price violated this swing low. Okay, it broke below and it started retracing. Last week we said that this was a cluster of support, and if you were to short here, you are taking a bet that this cluster of support was broken. Okay, and true enough, it broke. It could have bounced, but okay, it broke. And right now, price seems to be resisted by this cluster of resistance. You can see that this entire zone right here is actually resistance, and right now price is actually dropping. So another potential setup that you could consider would be something like this. Okay, given that this is resistance, and you just do it something like this. Okay, the risk to reward is not too good. Okay, so probably just wait for it to retrace higher. If not, what you can do is just wait for price to come up here and then look for a candlestick pattern, and then you take a shot down. Okay, again, we are sticking to the MPE trading strategy. M stands for market condition. Market condition is bearish because the swing low is broken, and you have a series of lower highs and lower lows, which you can see via the line chart. You have the low here, high, lower low, lower high, lower low, and so on and so forth. So bearish bias, next target this level here, 0.90395. Okay, just take note of these levels. Now let's move on to Aussie dollar. So Aussie dollar, personally, I think it's fine to trade. Okay, it's possible if you can get a nice trade right here. So let's run through the market condition first. So the one thing that I want to point out is that there's actually a reversal pattern right here. Okay, it's a bit difficult to see, but with experience, you should be able to see easily. So right here is the left shoulder, here is the head, and here is of course the right shoulder. And right here is the neckline. This is why this is the important key level. And of course, this is a key level because this is the swing low. And if you look back here, this was holding as support, and here as well, and here was resistance. So this inverted head and shoulder has been confirmed, and you have this pattern right here, which is a low, high, higher low, and higher high. So market condition wise, it's bullish, and we want to be buying. Now the problem is that, like I believe pound dollar, sorry, not pound dollar, like euro dollar, yes, okay, like euro dollar, Aussie dollar right now is in the middle of nowhere. Okay, it's somewhere here, and if you were to chase the market and you do something like this again, your risk to reward is terrible. So please do not do that. Okay, what you want to do is you just want to wait for price to retrace down lower, look for a candlestick pattern. Okay, remember MPE, M stands for market condition, P stands for price level. Price level is this neckline over here. The last thing that we need is an entry trigger, which is an E. It could be a bullish engulfing pattern, it could be a pin bar, it could be a morning star. Okay, again, these kind of patterns are taught in our 3-day training guide. Okay, there is a candlestick pattern cheat sheet right here. Let me just show you candlestick pattern cheat sheet and what is a candlestick pattern. It's all over there, so make sure you get the 3-day trading guide if you have not yet read it. Okay, so just wait here. Target will be here. Now let's move on to Kiwi dollar. Personally, I do not like to trade Kiwi dollar right now, okay, because this was the trend line that we previously drew. You can see that we are connecting this low to this low here, and you can see that price is struggling along this triangle, not triangle, this trend line, okay, ascending broken trend line. Okay, it's broken, now it's back above, and then you retested it. Okay, so it's not really exactly a normal ascending trend line because it's broken, retested, and it's now back above here. Anyway, price is trapped here, and you can see that resistance is right here. It's exactly near the top. Okay, so what happens is that it's in a very tight range right now, and you don't want to be trading this kind of trades because it could go either way. It could just bounce between the two, and it's very frustrating to take this kind of trades because you'll be in the green, you'll be in the red, you'll be the green and red. It's not pleasant. So what I prefer doing is that I prefer that you wait for price to break above, okay, and then look for a retracement down, and then look for a candlestick pattern, and then just buy it up. This is how I would like to trade it. Market condition wise is more bullish because you can actually see that there's an inverted head and shoulder. Let me show it to you. This is the left shoulder, okay, this is the head, and this is the right shoulder. Again, it's slightly difficult to see because it takes a little bit more experience, but if you change the line chart, you can see that this is a swing low, this is the head, and this is another swing low. So this is an inverted head and shoulder, okay, and the neckline is not yet broken, which is also why I recommend that you wait for the neckline to be broken first, and then you take the trade. Now price could also come down, okay, but if price come down, then ideally I want to see a form of reversal pattern here. Could be a double top or head and shoulder before I take the shot down, okay, because remember right now we are more in a bullish environment. Okay, you have a high here, you have a low, you have a higher high. If you count this as a high, then this is a higher high, this is a higher low and higher high as well. So we are more of in a bullish environment, so it's better to lean towards the longs, okay, not the shorts. So just take note of these key levels. Now, dollar CAD. Dollar CAD is very tricky. Okay, long term, last week we said that it's a bearish. You have a low, you have a high, lower low, lower high, lower low. Okay, but price is very stubborn. As you can see, price just refused to close below all this cluster of support. So just take note. This one I'll move it up. Okay, I'm just very careful in shorting, because even though this level 1.25036, which is given by this swing low here, even though this is the key level and price seems to have broken it on a Wednesday, Thursday seems to fail to close above, and Friday it tested it. Okay, just take note that all these wicks right here, the lower wick, this wick here, this wick, and this wick, most important is this wick right here, price hasn't closed below this wick. So there is still a possibility that price might retrace up. So even though our market condition is bearish, we need a good price level. And this price level is not clear at the moment. It's not clear whether, this level will hold as support or not. And this level is important as well. So my advice would be to wait for price to break down entirely and then take the retracement up. Okay? Because by the time price closes below this level, again, you are quite close to the support right here. So what ends up happening is that, by the time you get a confirmation, you might have a setup something like this, which doesn't give a good risk to reward. It just doesn't make sense. So my advice would be to just wait for this entire thing to be broken, then you trade the retracement. Okay, you need to be patient, but if you want good setups, then patience is needed. So let's move on to dollar yen. Dollar yen, it's also quite good to trade because it's quite clear as a downtrend. So if you look into this recent movement here, switch to the line chart, market condition wise is bearish because you have a low, you have a high, lower low, lower high, and so on. Now, price, it's making all this like doji candles. So I don't really like this. Okay, what I like to see is I want to see price retracing to this recent swing low, give me a nice candlestick pattern, and then I'll take the short down. Okay, it's a very straightforward play, but you need to be patient. Okay, you need to be patient and wait for price to retrace here. This level is given by over here, okay, the recent swing high. Okay, it's nothing special. This is the kind of setup that I recommend sticking towards, the very clear ones, not like the pound dollar, which is so difficult and it's confusing. Try to stick to this kind of setups and you should be fine. Now let's go into gold. Gold is also another clear setup which I recommend trading. Okay, I think a subscriber asked us on Telegram, asked us why we do not send out gold signals. Well, the reason is very simple. It's because the lot sizing is different. So we don't want to tell you to trade gold and then you mismanage your risk and then you blow your account. Okay, but if you want to trade, please study into the lot sizing, the position size, to make sure that you do not blow your account. So right here is the double bottom. You see the first bottom right here, and this is the second bottom, and this is of course the neckline. Price has broken above, failed to retest it. One thing interesting to note is that a lot of stop losses are below here. Okay, this is where experience counts again, which is why it's very important that you watch this kind of videos. A lot of people bought here and they put their stop losses down here. Okay, so this is what I call as a fake support, because the real key level is actually below. So what I think will happen next week is that price will come back down lower just to trigger the stop losses, and after it triggers the stop losses, then it will go up. So what you want to do is we are in a bullish market environment, is high, low, higher high, okay, higher high here actually, higher low, higher high. So what we want to do is we want to buy based on MPE, market condition is bullish. Next, we need a price level. The price level is this level here. Just be careful not to see this level as a as the key price level. This is the key price level. Wait for price to come down here, look for an engulfing pattern or some other form of bullish candlestick pattern, and then you take the trade up. Okay, so please be very careful about this level. I just want to point it out. Okay, this is where a lot of people are going to lose money if they buy and they put their stop loss just below this swing low right here. Okay, the key level is 1755. Now let's go into euro pound. Okay, then I'll end off with pound yen. Right here, we see a nice inverted head and shoulder. So this is the left shoulder, this is the head, and of course, this is the right shoulder. Now, price has not yet broken the upper resistance. Okay, in fact, price is parked right smack into resistance. So there's nothing you can do right now except to wait. Okay, this key level is so very important, this spike high right here. So please be very patient. Okay, wait for price to either break above. Okay, we test this with a nice engulfing pattern or some other pattern state, candlestick pattern, and then just take the long. If not, the other scenario is just wait here, okay, and then try to buy it up. Okay, again, wait for a price action confirmation pattern over here, because this level is strong as well. It's given by this swing low here, and it's here as well. Okay, here is acting as form of a resistance, okay, and here is acting as support. So this level 0.8595 is strong as well. So I have two scenarios for you to play, okay, depending on how market moves next week. Okay, lastly, pound yen. Now pound yen is in the grand scheme of things is in an uptrend. You have the high, you have the low, you have the higher high, higher low, higher high. Okay, in fact, this recent swing low, it's not violated yet. Okay, so for this reason, you should still be bullish on pound yen. Okay, you shouldn't be bearish. Okay, but one thing worth noting is that if you draw this trend line right here, you connect this to this, you can see that on Thursday price actually broke above, and on Friday price is still hovering here. So at this moment in time, we do not know if this is a fake break. Okay, it's a fake breakout of the trend line as well as this entire zone right here. Okay, let me show it to you. It could be a fake break. Okay, in fact, if you were to zoom in, let me just clear this so that's clearer. You can see that this low right here, this spike low, price didn't close below it. You see the close on Thursday is right smack onto the level, and on Friday it pushed down lower, but it still failed to close below this level. Okay, so for this reason, I'm still more bullish. Okay, it's going to be very tough to trade this until we see a confirmation above this level, which is 149.945. Okay, and that's natural because you have the round digit at 1500. Okay, this is obviously a very strong level. 150.00 is a psychological level. So this is a very important level which you need to pay attention to. If you see price closing above it, then that means that pound yen is bullish and you can go on to take the trade. And that is why I've drawn this level right here. Okay, if you take the trade, let's say you are able to get in something like this. Okay, let me just show you something like this, and you target here. Okay, you still get a pretty decent risk to reward. It's not the best, but it's still a decent setup. Okay, so again, we will send this kind of trades out in our Telegram channel. Like trades like this, we'll tell you where to buy, the stop loss, take profit. So just make sure you join our Telegram channel if you have not. Okay, the link is in the description. Okay, so summing up this video, next week is going to be a very difficult week. Okay, because there's FOMC. I've given you the key levels for each of these currency pairs. So I hope that you take note of these key levels, right? You apply the MP trading strategy, you stick with the market condition, and you watch for price at the right key levels. Okay, so please trade safe. I'll leave a link to the day trading guide and the Telegram channel in the description down below. Please trade safe, and I'll see you in the Telegram channel. Thanks for watching. I'll catch you in the next one.